Royal Standley of Oregon Pacific Financial Advisors, offering securities through United Planner Financial Services. Member FINRA SIPC, shares his planning approach to help people toward a place where they may be at peace regarding their financial goals. In this dynamic podcast, Royal will share his insights on how to design a retirement plan to help you plan for your future. Now, on to the show.
Hello and welcome to Life by Design with Royal Standley of Oregon Pacific Financial Advisors. Royal, it's so good to be back with you. How are you?
I'm doing well. How are you doing, Eric?
Fantastic. Everybody's good here. Still doing the self-quarantine thing and social distancing, and I am showering more often now, so that's good.
Well, that's good. That is excellent to hear.
Yeah.
Even though we're not in the same room, I think that's that just improves the quality of the podcast.
Yes,
just to know that everyone is freshly showered
by leaps and bounds. Yeah, they haven't invented smell-o-vision or smell-a-podcast or whatever that is. So either way,
and thank goodness at this point.
Exactly. In these times, absolutely. Zoom would be a disaster if it was smell-o-zoom. Anyway, okay.
Yeah.
Now let's get on to the topic. You said you're going to be presenting, and you sent me a bunch of questions. You really want to answer the frequently asked questions that you get posed through emails and through your website and just when you're talking to people.
And these are really the questions that I come across most often when someone's maybe thinking about working with us for the first time or thinking about making a change. So these are a lot of the questions I get hit with kind of very early on in a client relationship. I think it's good to kind of go over these and give people some reference points. So, if they're interviewing us, if they're interviewing another financial advisor, kind of gives them some kind of reference points to look at as they go through the interview process.
All right. I'm going to fire these questions at you, audience. I hope you're ready. It's going to be fast and furious as fast as furious as Royal wants to be with these. So here we go. Number one, Royal, I can do this myself, right? Hiring a financial planner versus doing it yourself. What's the difference? How do I decide if I can actually do this myself or if I need some help?
Right. So number one, I would say the big thing is all the technology companies, all the custodians, they are making it easier and easier for you to manage your own money. I think that's wonderful. I think education and empowering people to do that is a great thing. The real question is do you have the time, the ability, kind of the emotional fortitude to try to manage your own assets? I think a lot of people think that they do until that first time that they have a big decline in the markets like we've seen over the past few months. And then they start to kind of question things of, this isn't as easy as I thought it was. I don't know what to do when the market goes down. And I don't want to make a mistake that's going to do irreparable harm to my portfolio. So, I think you have to be pretty honest with yourself of, do you have the time to watch things? Do you have the time to stay educated? I'm all for people doing it themselves. And if they enjoy it and they love it, I think that's fantastic. Just because you have the option to do it yourself doesn't mean you should. Just like you have the option of changing out your own oil, doing your own drywall or painting, sometimes it's better just to hire a professional who knows what they're doing, aren't going to make the mistakes of someone learning how to hang drywall or how to make sure they put the oil cap back on the engine after they refill it. So really, people want to hire a financial planner to really help them put together that plan for the future, help them with the investments, help them with all the other parts that they're trying to take a look at and make sure that they're prepared for the future.
Okay, so that begs the question, how do I know that the financial advisor or financial planner that I'm speaking to is bringing all the right pieces to the table?
That is a great question. So number one, I would say, look at how long an advisor has been in the business. You really want somebody who's kind of probably past at least that first 5 years in the business. And I hate to say that because this is a very tough business to be in those first 5 years. But if we're talking about your retirement savings, I think it's really important that you have someone who's been through various market cycles, who has a lot of experience in how to deal with the markets and have already developed their investment philosophy, aren't chasing the first thing that they hear about as, oh, this is a solution for all my clients going forward. The other thing I would look at very closely is, what is their educational background? Do you have some of the degrees that we'll see, like a CFP or CHFC, some of the more advanced financial planning designations? I think are an excellent resource to kind of say, does this person care about learning more about the business and learning how to get better at their job? And then finally, I think one of the most important things to do, and it's probably overlooked by way too many investors, is take a look at your advisor's broker check record. Broker check is a online tool put together by FINRA where you can take a look and see what the history of a financial planner is. You can see what their previous jobs were, where they've worked. Have they been changing firms quite a bit? Do they have complaints on their record? I think that's an excellent tool to use to really make sure that you're working with, the person you think you're working with.
All right, Royal, here's the next question. There's a lot of different types of financial planners are out there, or financial advisors out there in a lot of different areas. And I can't even think of all of them off the top of my head, but how do you know which one you need or which one is the right fit for you?
Great question. So this really comes down to, there's a lot of people out there who are willing to sell you something. They're willing to sell you an annuity, a mutual fund, life insurance, etc. A lot of times these might be one-trick ponies where they have one product to sell and, that's what they're going to give to you. There's always the joke that when all you have is a hammer, everything looks like a nail. And I see that quite often with, people who just do life insurances. They might do a very thorough analysis of where you're at, but every solution they're going to come up with, at least for the most part, is going to be a life insurance product, whether it be an annuity or a life insurance contract. So that's always something to kind of be on the lookout for. Also, taking a look at the difference between a true financial planner and simply an asset manager. There's a lot of people out there in the industry who all they really do, and their entire value proposition is completely wrapped around, I manage your money. I don't provide any other value outside of managing your money. I'll ask you some questions about your accounts, but that's probably about as far as it's going to go. What we do at Oregon Pacific Financial Advisors is we are true financial planners. So we do all the asset management, but on top of that, we're looking at your tax planning. We're reviewing your tax returns to see how what we're doing in the portfolio is affecting you. We're looking for strategies you could take back to your CPA and maybe try to save some taxes. Mm-hmm. We're looking at your estate plans, your wills, and your trusts. And if you don't have those, we're connecting you with an attorney to have those prepared, or at least do some consultation to see if something's necessary. We're taking a look at college planning for kids and grandchildren. And then also, I think the most important part of all this, as we're doing the retirement planning and saying, do you have enough to make it through the rest of retirement? We're also looking at that income planning portion, which I think gets overlooked by a lot of financial advisors, which is which accounts do I need to take money out of to really help my portfolio last as long as possible, and also along those same lines, pay as little tax as possible by smartly taking distributions from various accounts.
Got it. All right. The next question kind of comes back to thinking about that financial planner or that financial advisor. Royal, what is a fiduciary?
So it's interesting. I get asked the question, are you a fiduciary? A lot more than the question of what is a fiduciary. A fiduciary has become somewhat of a buzzword in the last few years. So really what a fiduciary is someone who is going to come in, basically help you with a problem, in this case, financial planning and investment management. They're going to sign a contract with you to basically put your interests above their own. Mm-hmm. In a fundamental basis, it's really someone who is going to look out for you above their own interests. If we look at kind of how the industry has evolved over time, we really started off with the majority of advisors just being a broker of some kind. What that means is they don't have a fiduciary duty necessarily to a client. Their only real regulation there is to make sure that any investment recommendations that they make are suitable for that individual client. Mm-hmm. Now, suitability is a pretty wide-ranging word. Is it suitable? Versus, is it in your best interest? Fiduciaries or investment advisors are really taking that, I think, to a much higher level of care, and that's that fiduciary standard. Advisors like myself, we're actually duly registered, so we operate a little bit in both worlds, but the vast majority of everything that we do is under that investment advisory umbrella. Mm-hmm. So I think the number one thing when we're talking about a fiduciary is, what are the conflicts of interests? The biggest thing I think the investing world wants to know is, how are you getting paid? Who's paying you? How are you being compensated, et cetera? The industry as a whole, I don't think has done a good job of really talking about this and really helping clients make sense of it all. So conflicts of interest exist all the time. The biggest thing that we want to do is with our clients, really just get them on the table and disclose them. Make sure the client is aware that, hey, there's a conflict of interest here, whether it's a recommendation that we make of moving money over from another account to our management. Because whenever we make that recommendation, we're basically saying, fire whoever's managing your money over here and bring it over under our management. That's somewhat of an implicit conflict of interest of, hey, you should hire us for this. So we just want to make sure that we're disclosing to our clients, hey, if you want, you can leave that over here. But if you're not getting the service or you don't have access to the choices that you want to have, that's a great way of giving yourself that freedom, is by moving the money over. So we just want to make sure that we're disclosing all the conflicts of interest, and ultimately, how do we get paid? In the vast majority of our client relationships, we get paid a fee that the client pays us to help them manage their accounts and also cover our costs for all the financial planning that we do. Now, in our initial engagement with a client, we may charge an upfront fee to build the initial financial plan, because that involves a lot of research, a lot of data gathering and data input there. But after that, we really wrap our costs into our advisory fee, which starts at 1% of assets under management. So that clients kind of know exactly what they're paying for. So in the vast majority of cases, we're just getting paid 1% on assets under management from the client. And the nice thing with that is, no matter what products we're recommending, that's going to be the same. If we're recommending someone to be more conservative, more aggressive, it really doesn't matter. We're getting paid the same. So the client can rely on that information to know that there's no conflict of interest there, that I'm not getting paid more for making a recommendation over here versus into something else.
Royal, we talked about a fiduciary, so this question actually kind of goes back to that a little bit. But being a fiduciary, is that really the only standard, or is that the main standard you should be thinking about when hiring an advisor?
I think it's a very important one, but it doesn't solve all your problems, because ultimately, Bernie Madoff, who made off with, I think, $50 billion there in the 2000s, he was a fiduciary.
Oh, great.
So just because you file the right paperwork and you put out disclosures, none of that means that you're actually doing right by the client. So you still want to go into everything with your eyes wide open there. One thing I always say whenever, Bernie Madoff comes up, or any types of Ponzi schemes or concerns about someone running off with your money there, is the importance of hiring a fiduciary who is using an independent custodian. What that means is the fiduciary himself or herself isn't actually taking possession of your funds, but is instead depositing them at a third party where they do not have access to it, where they can just take the money and run. And that's something that we do with all of our relationships. It's really something where if someone says, I'm going to invest your money, I'm going to put it in this account that I control, my only recommendation is to run as fast as you can away from that situation.
Well, it's interesting that you brought up Bernie Madoff and that he was a fiduciary. Here's the thing, that in every industry, you have people that can try to ply the system. They can take advantage of people. And it's interesting because I have a large glass block on my desk that was once on somebody else's desk, I'm sure, but it has 4 sides on it, Royal. And each side has some key words that businesses use as maybe their standard. So we've got communication, we've got excellence, we've got respect, and we've got integrity. And they each have a definition. So here's integrity. We work with customers and prospects openly, honestly, and sincerely. When we say we will do something, we'll do it. When we say we cannot or will not do something, then we don't do it. And then if you look at the top of the cube, it has the company's name, and it's Enron. Vision and values, baby. This big block sitting at my desk. I like it to sit here. I was never a part of Enron, but we know what happened there too. There were a lot of dishonest people within that company, and even though they say nice things on this cube that sat on somebody's desk, it doesn't always mean that that's what they actually stand by or they live by. So I think it's great that you brought that up.
Yeah, we try to do everything that we can to protect investors and our clients, but ultimately, investors need to kind of follow their gut. If something doesn't feel right, if there's a question you feel like you should ask it. I always want to hear questions from clients. If there's a worry, if there's a concern, I want to answer those because I just feel like, I want to run my business as transparently as possible. And, that's why we're doing a podcast today about how do we get paid and answering these questions about how to hire a good financial planner and a good fiduciary here.
All right, Royal, I know we were talking about how you get paid, and you mentioned fees, and one of the questions on your list is, why aren't you fee only?
And fee only is an interesting term. So some of these terms that we throw around as financial advisors and we use them to communicate with clients and prospects always strikes me as very funny. We seem to want to lead with how we get paid. So fee only, fee-based, mostly fee, commission, all of these are just terms to define how an advisor gets paid. So we are duly registered. We're registered with a broker-dealer, United Planners, and we have our own registered investment advisor registered in the state of Oregon, Oregon Pacific Financial Advisors. All of our investment advisory business we run through Oregon Pacific Financial Advisors. At this point, we've been in business for about 25 years now. So we often get asked, why aren't you just on the fee side? And I think there's a simple reason for that is we've done kind of both sides for so long here. We have clients that might be in a mutual fund that doesn't necessarily need to be managed and charged a 1% fee on. Maybe there is good products like the Oregon 529 plan. Maybe there's just buy and hold stock traders who just want to buy a stock and sit on it for the next, 10, 15 years that don't want to have their accounts charged 1%. Sometimes it's much easier to use a commissionable account to help a client solve a problem than it is just saying, hey, I'm an investment advisor, I charge 1%, and if it doesn't fit into that, I'm not going to do it. So oftentimes what we'll look at when we're sitting down with the client is look at kind of the lifetime fees that a client will pay and say, what's going to be the most economical for you to pay? And sometimes, honestly, it could be an A-Sure mutual fund where they're paying a fee up front and sitting in that for a period of time. Same with annuities. We're getting better at having advisory annuity contracts, but the vast majority of annuities are sold by commission. And what that means, the difference between fee versus commission, is when we say fee, that simply means that you, the client, are paying that fee. With a commission, the client isn't necessarily paying that fee. We're getting paid from a third party, usually the investment company or the insurance company, that is paying us that commission. Same with life insurance commissions. When we help a client, protect their family with life insurance, we get paid a commission from that. Looking at all that, we just see being duly registered as a way for us to help save a client money in the long run by having access to kind of the whole gamut of the investing space to do that with. Now, the biggest thing that we look at is, are we disclosing this? Are we helping the client make sense of this? Because I might be able to look at a situation very quickly and say, well, it's going to make more sense for him to pay a commission one time versus getting hit with an annual fee. So in a case like that, it's just helping them understand, hey, you're going to pay less in fees over here. You're going to pay a commission, but in the long run, you're going to be better off, all other things being equal. So we are really just trying to help our clients understand that and look out for their best interests. And, sometimes reaching into our other tool bag allows us to do that at a higher level.
Got it. All right. Well, I've got a couple questions that aren't on your list. I'm going to throw them at you.
Excellent.
You ready?
Let's hear them.
All right. So here's the thing. I'm working with you, Royal, right now, let's say. And I've got some family members, but they're not in Oregon. They're in different states. Are you licensed in other states?
I am. I'm licensed, I think, in about 20, 25 different states. it's a pretty simple thing to get licensed in another state. So if it's in a state that we're not licensed in, we can easily get licensed there. But for the most part, especially on the West Coast, we're licensed in just about everything west of the Rockies.
Got it. And with today's day and age where everybody's meeting by Zoom meeting anyway, it's probably pretty standard where you can meet anybody anywhere in the United States. So that's fantastic.
Absolutely. And I have clients all over the U.S. and referrals by other clients or family members. And we have a great time working with those folks, even if it has to be, over Zoom or over the telephone. You're just not limited by your geographical location anymore.
Next question. If I come in and we talk or we meet by Zoom meeting or whatever, and it doesn't seem like it's going to be a good fit due to my circumstances or certain things that you specialize in, do you have other people that you recommend?
Absolutely. If it's just not a good fit for what you're looking for, we have other advisors we can refer you to. Also, a lot of times, sometimes people just aren't ready to start investing. Sometimes there's other things like maybe too much debt, maybe some other issues that they need to look at that might make more sense for them getting ready to retire. And one example I can think of quite often is someone who comes in, let's say they're a married couple, about 60 years old, haven't saved anything for retirement. Sometimes we'll get done with that first appointment and I can look at this and say, the best thing for you to do is just try to work and get the house paid off. There's no need for you to be saving because really you're not going to be able to save enough over the next 5 years to offset what it will do for you financially to get the house paid off in that period of time. So, we might refer them to somebody to help them refinance, maybe lower an interest rate, a reverse mortgage specialist if that's something that they need. So we refer people out all the time if we're not the right fit for them, because my heart is in this to help people. And, sometimes they need someone else's expertise that will help them much more than mine.
And I want everybody listening to understand that truly Royal did not know I was going to ask those questions, but that's exactly why I asked that last one. I've known Royal for quite some time. I know where his heart's at, and I know that he's going to do everything he can to make sure that you're in the best position possible because he is a fiduciary and he is a true fiduciary and takes that very seriously. Royal, thank you so much. Any closing thoughts for today?
I think the biggest closing thought here is, if you're trying to decide between doing it yourself or hiring a financial planner, I think the easiest thing to do is sit down with 1 or 2 or 3 financial planners. No more than that, because, it gets a little repetitive after a while. But I think it's good to go through that interview process and just hear kind of what are some of the things that a financial planner can bring to your own situation. And maybe there's things that you haven't even considered that can help improve where you're at right now.
Absolutely. Royal, always a pleasure. Thank you so much for your time today.
Thank you, Eric. It's great to be here.
You bet. And I want to thank each and every one of you that's listening right now. Thank you so much for listening to the Life by Design podcast with Royal Standley. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when Royal comes out with a new podcast, it'll show up directly on your listening device. This makes it much easier to share these podcasts with your friends and family. And now we know it doesn't matter what state they're in. Share this with them because Royal will be happy to have a conversation with them. Again, thanks for listening today. For everyone at Oregon Pacific Financial Advisors, this is Eric Johnson reminding you to live your best day every day. And we'll see you next time.
Thank you for listening to the Life by Design podcast. Click the subscribe button below to be notified when new episodes become available. The views expressed are those of the presenter and may not reflect the views of United Planner Financial Services. Material discussed is meant to provide general information and is not to be construed as specific investment, tax, or legal advice. Individual needs vary and require consideration of your unique objectives and financial situation. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Advisory services offered through Oregon Pacific Financial Advisors, Inc. Securities offered through United Planner Financial Services of America, member FINRA and SIPC. Oregon Pacific Financial Advisors, Inc. and United Planners Financial Services are independent companies.